Hello, YouTube. Is the stock market broken? Is a stock market crash coming? That is our big question. And I say that because we have stopped going up. And as we know, stocks can either go up, they can go sideways, or they can go down. So if we've stopped going up, the potential, keyword being potential, for us to go down has increased, which means maybe stocks are going to turn into stinks. So what that really comes down to is I think the delayed effect of the seasonality chart where we note that we have that little head and shoulders looking for that leg down, even though it's a little bit delayed. I left a note for our group this morning, and you can join us at theelgo.com if you want to learn more about that for a 14-day free trial to trade with me, Justin from the YouTube. So here we go. Let's jump in. We're going to look at that in a few minutes. We're going to talk about the seasonality chart. We're going to look at the heat map because stocks that have actually had terrific news are actually the biggest decliners. AMD, Tesla, bearish engulfing daily candle for it. And the big man talked today for over 2 hours. He was talking for a long, long time. It was nearly 3 hours of testimony. What did he say? Says interest rates pause is expected to be temporary. I'm going to ask you for a huge favor before we go further. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. Here are his prepared remarks, which he read out loud as the testimony began. You can see a lot of it is very similar to what he talked about at the FOMC last week. So tell me exactly why that matters, Justin. Well, we have our gap. We closed below yesterday's low. We've stopped going up. The recipe for us to go down is here. That headline we saw from Jerome is also bearish. So what does this mean? It means after more than 3 hours of testimony, Jerome Powell pretty much sung the same tune that we heard from him last Wednesday. They were calling this a dovish update. Jerome Powell provides updates twice a year, so every 6 months. And this time it was dovish. The first time in over a year. So if names like Tesla, if names like AMD are selling off on good news, what does that tell us? Well, it tells us that maybe it's already priced in. So we're going to look here at the chart on the S&P. But first thing I want to do is actually bring back all my lines. We're going to talk about the gap to the upside, the gap to the downside. But first thing I want to do is actually to show you these notes here. And I'm showing you this today because I think I did an excellent job just summarizing what I wanted to see today. There's some things crossed out. So again, join us for that 14-day free trial if you want to see what those are. We got some swing algos, which just means that we got some alerts. Anyways, they failed yesterday, but if we reclaim those prices today, watch for a bigger fade. We got that today. What do the bears want to see? The bears want a daily lower low on SPY, QQQ, and IWM. We're going to focus on SPY today just because that's what we talk about. QQQ had a bigger fade. And if we look across here, what did the Russell do? The Russell is down by almost as much as the S&P. Actually not even that bad, 0.25%. What do the bulls want to see? The bulls want to see the daily gap filled and a push higher. So who won? Team Bear. Let's look and see what happened. So I'm going to do that same thing here where we're going to now remove all the lines, and I'm going to do two things here. First thing I'm going to do is actually take a horizontal line, use the magnet, and snap it on yesterday's low because I want you to see what happened at the open because it will usually, again, keyword here being usually, self-manifest to do what it wanted. Here's the open. There's the push down below 435, which means a daily lower low compared to yesterday. All red volume here, by the way. What happened? Well, it gets bought up. We go back up. We get to the gap. We reject on the gap. And so one test, two tests. On the third test, we get over. We start reversing after we hit our, not quite our close from yesterday, but pretty close to it. And then just a straight fade into the close after Jerome started talking. Volume ramps up into the close here. So what does that mean? It means that the bears defended today. It means the bears flexed, which is why I believe we could be headed for a bigger move lower. The other reason why I would note this is because we still have this gap that remains open here on the upside. And why does that matter? Well, the only spot we actually made it to is the close yesterday is 43718. Our high of the day today, 436.99, which means the bears defended 437 and exactly where we would expect to find liquidity, we did. So for tomorrow, where would we expect to find liquidity? Well, it's right here at 435. That is the closing price and the low we established on Tuesday. So if we bring all this stuff back, we've stopped going up, we're coming down. We don't quite have the bigger move yet, but if we look to our seasonality chart, We now talked about this. Hopefully you can do me a huge favor and smash a thumbs up or subscribe to the channel if you enjoyed that little nugget, because it was quite helpful in my opinion. If we now look forward here to the seasonality chart, which acts as a roadmap, not a Bible. But if we look here at this most recent period, and here I'm talking about May to June. So we're going to focus in on this one part. Rewind the video if you want to see exactly what I'm doing. We're going to go here to, let's actually pull this over here to the side. Let's go to the left side here for S&P. And I'm going to pull up SPX because I want to do a side-by-side to see whether or not things are matching here. Let's go to a line chart. Okay, here we go. So the first part is that this is into the late part of May. So what do we have? Wow, well, we have a massive ramp here, right? Whoop. It lasts for a lot longer than even I would have expected. So I was a little bit surprised by this move higher here. There we go, right? Big move up. We get a launch up. We start to form some kind of head and shoulders inside of here, just like we do here, right? We got our, let me draw. Why can't I draw here? Here we go. Doot. That's the same thing I'm looking at. It's delayed. So it's already at June 21st. This is supposed to be into the first, I don't know, like the first 10 days of June. Well, we're about 10 days behind. So it's not like 100% accurate, but it's looking pretty good here. So the important thing here is this threshold here, or a neckline. So if we fall below it, boo, right, we go down. Then we dead cat bounce, come back up, test the same area, and then go down for our deepest cut. So what that would mean for me, if we're looking here to SPX on a line chart, it would mean we come back down to, like, I don't know, 4,300, dead cat bounce back up, reject, and then go down for maybe a 50 DMA test. Why is that 50 DMA so important? Well, let's get away from the silly line chart. Again, humble line chart might give you a little bit of perspective. Let's go back to SPY, and let's remind ourselves of what we talked about yesterday, because we talked about this lower gap at 422. We talked about the significance here on the monthly chart. So 422 is going to be our May high. And let's just remind you why that's important. Because if we now come back and fall below 422 into the end of the month, well, that would mean we got a failed breakout. It's still a lot lower from where we are now. And 432 is definitely a strong pocket of support before we get there. It is the Fibonacci area at 430. It is our August high. And it is also a weekly top. We got 432 going back to the June 9 weekly close. So we got an inside bar. We talked about that on the weekend. Hopefully you're following along. What that means is, if the seasonality chart is correct, it just means we're delayed. It's not been avoided. So we come down, I don't know, like 430, bounce off those relative highs, get another reject here at about 440, come back down, fill the gap, and then we reverse higher, ultimately forming some kind of a W. And this is important because we haven't really had a test of the 50 DMA, a true test, since we broke out. Got close once, got close twice, got close 3 times, but never actually tested it. So that is how I could see that seasonality chart playing out right now. I would love to see a gap fill. I want to watch the reaction. I would expect we would get a bounce and a violent one, which could lead to a squeeze into July. And that would mean that risk assets are going to continue to catch a bid. So that is kind of what I'm looking at here on the S&P right now. Let's pop over to QQQ and IWN to see if there's any other clues. Yes, there are. So QQQ did something very similar to the S&P, but it missed the strength. So it opened up, pushed up a little bit, and then just sold off. It opened up pretty close to flat, and exactly where we would expect to find the liquidity, we did. This is important because we have a gap that we just recently filled, or the yellow box, which ends here at 356 and change, something like that. 356. Where are we right now? Well, we're at 361. So roughly a 1% cushion to back test this zone. If we can't hold that, I think we're going to get a test of that uptrend, as I noted before. So that would be a test of the uptrend. That is also going to be very important. Looking to the Russell, it looks a lot better, to be honest. It's kind of flatlining here. And we note that because we saw some rotation. There's actually some ETFs that are green today. New York Stock Exchange eking out a gain. Energy eking out a gain. Sorry, 0.8%. Healthcare eking out a gain. Utilities up by 0.8. IAK, or regional insurance, up. But we're noticing that the DAX is down, looking for a test on its 50 DMA. China is down. Emerging markets are down. So with all this news now baked in, it pretty much seems like the only game in town people are willing to bid up is Bitcoin. After we heard that news from BlackRock, well, It's rallying massively here from about 25K to 30K in almost a straight line, which means that GBTC and ETHE are catching a major bid. And the reason why is because these are managed by Grayscale, but they're futures, right? It's a futures ETF. They want to provide a spot ETF from BlackRock. And that would mean that a lot of the arbitrage or the the potential here is just going to get removed. Bitcoin is up by a lot less than 50%, 45% in the last few sessions. And that's just because the arbitrage is now being removed. So we look here to the move on Bitcoin. It's up by about 23, which means that GBTC actually doubled it. And ETHE is actually up even more. It's up by, it's up by 40% as well. So what this tells me is people are willing to take on risk. They're buying up Bitcoin, they're buying up Ether. Jerome got a ton of questions on coins today. He did not indulge. He did not talk about it. But we note that if people are willing to bid these up, why are they no bidding up the tech stocks? That's my question. Let's look at a few more quick charts just to see whether or not there are any other warning signs as an update to what we talked about yesterday. Apple is now below its previous high here at 185. I really want to see it back above 185 to confirm this is not going to be a reject. We're looking for a move lower. We have a nice hammer, just like we do here on NVIDIA. And we've been spending a lot of time talking about these leaders. So NVIDIA is still solidly above its previous top at 419. We got a really nice dip buy at 420 today, rallied up, gave us a nice hammer. The risk here is that if our leaders, meaning tech, are getting soft, and notably NVIDIA and Apple, which are the new all-time high club, if they fall back below 185 for Apple, oh man, I got terrible writing. 185 and about 419 for NVIDIA. The risk is they could drag the market lower as they dragged the market higher. So that is it for today. Thank you for tuning in. I'm going to leave you the weekend video over here on the left-hand side if you're interested in watching more. If not, thank you, beautiful people, for your support again one more time, and I look forward to seeing you tomorrow.